You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, my name is Jonathan Rose and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, go over the market, share some thoughts, and once in a while we'll share our trade of the day. A couple things to talk about today. I want to first talk about the Qs. The QQQs, the NASDAQ, or just overall indices are so quiet, right? For the last week and a half, volatility has gone lower. There is nothing going on. It seems like the market is just waited on bated breath for the election. So that's what I see going on right now. I want to talk a little bit about over trading because so often we see markets slow down, but traders still expecting movement, still wanting to trade, still wanting to make money. I get that, but a lot of trading is discipline, waiting on the sidelines and waiting for those opportunities to move. So let me jump in. First, I want to say hello to everybody. I'm on the YouTube chat. If you're on, hello. Hey, Rich, plug, what's going on? Marty, thanks for joining us. Hey, Chris, yes, we got a poll shooting off today. Let's see how this works. The poll was, do you think the market is going to go higher, lower, or neutral? We have no bullish votes. We have several bearish votes. But the winner, the majority winner, is going to be neutral. And I'm going to be on the neutral side as well because there's just not that much going on. Let's go to the screen. Let's go see what we got. All right, chat. I'm going to move the chat to a different screen. I will still be following the chat if you have any thoughts. All right. Before I go to lithium, which is our second topic, I want to talk about the Qs, and to do that, let me just open up a chart. Chart, boom. Keep it nice and simple. And let's talk about the QQQ. NASDAQ. So overall, guys, look at what is going on, okay? Looky. Just wait and see, okay? It feels like there's a lot going on, but there's really not. It's really quiet. So if anything, traders can just churn yourself to death in there, and churn is just over trading, waiting for opportunity. There will be opportunity, but let the market move. Let the market breathe. Nothing is going on right now. Look, it's just sitting there, okay? Let the market breathe. Let it work. A lot of commodities are coming into play, right? Gold, been on a phenomenal rally. Silver, copper, all commodities, most commodities. Well, what about lithium? Lithium has fallen out of favor over the last couple of years. There was a big move in lithium when Tesla was going bonkers, but then it kind of calmed down a little bit. So let's talk about it. I'm just going to pull up my pen and lithium. The biggest lithium companies are going to be SQM and then ALB. And that's what we have in front of you going back to 2023, the beginning. You know, both of these obviously very, very, very offered. So we look at this as the industry. Okay, this is the lithium industry. And when we trade, we look for divergences. We look for strength in one and weakness in another. Because if lithium does a big turnaround and rallies, and I think lithium is inexpensive. There's a nice bid to lithium. Some of our names, some of the smaller lithium names are really starting to rally. So SQM, ALB, those are the main ones to watch out for. What we've done here, though, is we still have lithium and we're still talking ALB and SQM. But then I added some even smaller caps on there, because if lithium turns and does rally, the smaller caps, just like they got hit harder on the downside, are going to rally more on the upside. So a couple to watch is PLL, which we like, and then LAC, another one. But when we follow these guys, I want you to follow the industry. I don't want you to just follow individual companies, because through the industry is where we can find really good value. That's how we're looking at lithium. I am bullish lithium overall, and it's something that we trade in our advanced notice community. Wowee! Divergence. We just had our biggest divergence trade of the year. What is a divergence? A divergence is a pair trade. Coke versus Pepsi, Netflix versus Blockbuster. You're trading two correlated assets that move together that once in a while break apart. That's what creates a divergence. When we see that divergence, we want to buy the cheaper one and we want to sell the one that's more expensive. Well, October 8th, we shared a trade in LRN and EDU, two educational companies. EDU, I was a market maker in EDU from 2011 to 2015. I know this stock really well. LRN in this relationship is the one that went lower. EDU in this relationship is the one that traded higher. So what did we do? Well, October 8th, I noticed a big divergence between these two highly correlated names, EDU and LRN. The trade, we want to buy calls in LRN. Buy the 85 strike calls for $4 or better. We also wanted to buy puts in EDU. Buy the 70 strike for $3.10 or better. That's the full trade. Let me just get these off, because today, as good as we could expect the result to be, okay, EDU is going to be in this blue, pumice maybe, fuchsia. LRN is going to be in this white. LRN came out today and just absolutely beat the crap out of their earnings, just obliterated earnings. Stock goes from 62 up to 85. LRN is just a POS anyway. LRN goes from 70, trades down to 62. Here's the full trade. LRN long, 85 calls. Right there, taken off for $5 or so. And then EDU, the 70 put, is trading 870, 880 right there. Let's call those $9 for easier math. So that's $1 up top and then another $5.90 here. So the trade overall, we risk $7.10 to get in. We make $6.70. So it's $710 of risk, and we earn 100%. Double our money, $670. The key with this trade, and this is where people get a little goofed up in this style of trading. The key to this trade is it's one trade, okay? 1, 2. This entire thing is one trade. Okay. We are not just bullish LRN and we're not just bearish EDU. The reason this trade works is because we are trading the combined. That's how you properly trade a divergence. That's a great way where you can manage your risk to the upside and to the downside. And this was just an absolute dream trade. So congrats, everybody that was able to take advantage of that phenomenal, phenomenal trade. Next topic, overtrading. Marty, looks like we're getting a very oversold indication from the MOVE index. Great comment. We're getting a very oversold. Oversold, and this is a pet peeve of mine. JR, it looks like we're getting a very oversold indication from the MOVE index. Oversold is a buzzword. There's no such thing as being oversold. It needs to be looked at relative to something else. Nothing is expensive in isolation. Nothing is inexpensive in isolation. Everything needs to be looked at relative to one another. Wade, how do you find these divergent pairs? You find these divergent pairs by looking at correlated instruments. We want to look at industries rather than just a specific stock in an industry. Rather than looking at a gold miner, I want you to look at all of the gold miners, look at them relative to one another, and then make your trading decisions based on that. We talk about VIX term structure. We talk about this a lot. VIX term structure is what drives the market, in my opinion. So we look at the VIX, which is a 30-day measure of volatility. We could also look at the VIX as a one-day measure of volatility. VIX 1 day, starting in October, which is right here. Look. Uncertainty, risk, it's all coming out of the market. Why is it coming out of the market only on that VIX 1 day? Because we have the election. We have a built-in catalyst that's going to come. The market knows it's going to come. The market's waiting on bated breath. But with traders, they're trying to make something happen when there's nothing going on. So I want to just pull this up because I think it'll give perspective into what I'm talking about. Get out of here. Okay. So if I pull this up right here, make it a little bit cleaner so it's easier to look at. And what I want to show you is I'm going to show you the VIX term structure. And if we look at the VIXs, VIXI, the 9 day is right here, 1635. That is up quite a bit. The other day was trading 13. There is more volatility coming in to 23 days, 30 days. So there's uncertainty right now. But before today, everything was just offered. And if I go to the next slide, here is the SPY overlapped with the 1 day VIX. And I wanted to add this, guys, because when that 1 day VIX goes down, the market is trading up. Keep things nice and simple. Okay? The VIX is just a measure of uncertainty. So when that 1 day VIX continues to get pounded into the ground every single day, there's just not much going on, or the market's going to go higher a little bit. It looks like today we're finally getting a little risk priced into the market. Watch that VIX 9 day closely. If it continues trading to 16, 17, 18, you're going to see follow through on the downside of the Qs. That VIX 9 day turns and it goes from 16 to 15 to 14, that market's going to go right back up. Everybody in our all access, I got another earnings trade for you. Excited to share? We'll be right back. Hey, everybody in All Access. How are you guys doing? Divergence trade. Great learning lesson, too, by the way. When we shared the divergence trades,